welcome to the What's Success podcast episode 3, produced in collaboration with Singapore Polytechnic School of Business and Sustainable Finance Institute Asia. I'm your host Mia for today's episode.
And I'm Stephanie, Collaborations and Coalition Senior Associate from Sustainable Finance Institute Asia. And I'll be co-hosting today's episode. And in today's episode, we'll be diving into the realm of sustainable finance from an asset management company's perspective.
And we have a very special guest with us, Sheng, Green Bonds and ESG Analyst from BNP Paribas Asset Management. Welcome to Singapore Polytechnic and this episode.
Great, thanks for having me here.
Okay, to break the ice, first and foremost, Sheng, may I get you to introduce yourself, your education, your career background, and what you're currently doing at BNP Paribas Asset Management?
Sure thing. So, I was born and raised in Singapore, did my academics here, studied at Singapore Management University. And then when I was about to graduate, I had the question, do I stay in Singapore or do I try to explore the world? And if you think about it, 10 years ago, no one was really talking a lot about sustainability. I'm sure Stephanie will agree. And I decided, hey, if I wanted to work in this field, I needed to be with where the most active ideas are being explored, being worked on. And I was really lucky to find an opportunity in Europe. So I spent a few years there and had another great opportunity to go to Hong Kong for the next 6 years of my career. And finally, 2 years ago, I moved back to Singapore with BNP Paribas Asset Management in this role. A little bit about what I do at this asset management company. I looked at how our investments, meaning that our equities, our bonds, how they can use sustainability information to help investors make better decisions in their investments. That's the crux of it.
Thank you so much for your introduction, Sheng. Your experiences and insights will be very useful for our today's episode. So in today's episode, we'll be diving into the realm of sustainable finance from an asset management perspective. So Stephanie, can I ask you to explain about what role do asset management companies play in moving the sustainable agenda?
That's a good question to start off this podcast. So overall, asset management companies, short AMCs, help to allocate assets from various investment portfolios. They can prioritize investments into green technologies, renewable energy companies, and other companies with strong ESG principles. AMCs also conduct research and analysis on markets, monitor and manage risks, as well as develop and implement investment strategies. In Singapore's context, AMCs are important in moving the Singapore sustainability agenda, and they are responsible for capital allocation, and they have the ability to invest in green innovation as well. AMCs are also aligned with government policies such as the MAS guideline, and they often work with regulators to shape policies. AMCs also help to promote ESG integration into investment portfolios.
Okay, thank you, Stephanie. Now let's move on to Sheng. Could you share a bit more about how BNP Paribas Asset Management views sustainability and sustainable finance, and what are the guiding sustainability principles of, and how does your organization incorporate these principles into your business practices?
Yeah, long question, but a great one. So like what Stephanie mentioned, asset management companies, we are responsible to allocate capital, and this capital comes from our clients or our own capital if you were your own investor. For BNP Paribas Asset Management, we've decided since 2019 to have a global approach, a firm-wide approach to sustainability in our investments. And this is what we call the Global Sustainability Strategy. In this strategy, we have 6 different pillars of how we can include sustainability in our activities, including investment activities and also operational activities. But I'll just highlight 3 of these principles because those are what really exemplify how we incorporate sustainability in investing. The first one is what we call the 3 E's. So the first E is the energy transition. What this means is how the world's economy, currently running a lot of fossil fuels, how it is going to move from fossil fuel base to electrons base. So from a carbon molecule going to electrons, and these electrons could be created using renewable energy. So the first E, energy transition. How are our investments going to be affected by this? The second E is called ecosystems, ecosystems health. And what we are trying to do here is trying to understand how are our investments affected by the degradation of nature, the degradation of our natural ecosystems. One really good example is the health of bees. Now, bees are pollinators, and without these pollinators, plants will not be able to grow, right? So in order to grow rice, in order to grow different crops, you need these pollinators. So what happens if the bees collapse? How do we protect those bees, and how can investments consider those risks? So that's the second E. And the third E is equality. So here we're thinking about social equity. How do we reduce the risk of income inequality, affordable housing, affordable healthcare in our investments? So those are the 3 E's. The second pillar that I want to highlight is that ESG integration. I should just state ESG stands for environmental, social, and governance, basically sustainability. All of our investments today have to consider sustainability information, whether it is to make a positive impact or to reduce risk in our investments. All of our investments today need to apply sustainability integration. And finally, we have the third pillar, which is products. When I say products, it means investment products. So for example, if an investor wants to buy the Straits Times Index, which is all of Singapore, blue chip companies, what is a sustainable version of that index? Does it mean changing some of the companies in the index, or does it mean excluding some of the companies or favoring other companies? So we're trying to create investment products to reflect sustainability characteristics. So broadly speaking, that's how we at BNP Paribas Asset Management go about implementing sustainability in the organization.
Wow, it seems like BNP Paribas is doing a lot of things at one time, and I don't know, it may be overwhelming for students at this point. But maybe to set some definitions, could you explain what green bonds are and how they differ from traditional bonds in terms of their structure and objectives? Sure
thing. So green bonds are made up of 2 things. One, the first word is green, and the second word is bond. So maybe let's start off with the bond. A bond is a type of debt that investors can invest in. So actually, the Singapore government, we say is that the Singapore government issues debt. So they would have, say, they want to borrow from investors, and investors say, hey, Singapore government is a safe a borrower, and we are willing to lend money. It's like a loan. In fact, it is a loan, but in this case, it's open to many different investors. So this is a bond. A green bond, in that case, is the main difference between a green bond versus a regular bond is that instead of saying I take the money and I can use it for anything, the issuer of this bond is now saying I take the money and I'll use it for specific projects, specific purposes. In fact, the Singapore government has a green bond, has different green bonds, and they have decided to use it to finance some of the low emissions transportation in Singapore. So that's the only difference between a green bond and a regular bond. is that the money raised from the bond is used to fund green projects, green assets.
So what are the key factors that BNP Paribas Asset Management considers when assessing the sustainability and the impact of these green bond issuances?
Yeah, that's an important one, because what we realize at BNP Paribas Asset Management is that not all green bonds are great. There are differences between green bonds. Some might say, that bond is really dark green, and some might say that's really not so green. So how do we make this differentiation? So for us, we go back to three principles to help us make this differentiation. The first one is looking at the greenness of these projects. So a positive example is definitely a green bond that finances renewable energy. That's really quite good. And on the other end, you have a green bond that finances energy efficiency, but for fossil fuel sort of projects. Now, maybe for some it could be enough, but for us at least we think it's still not green enough. So we need to be careful on the greenness. The second element is ambition. So what this means is, even if those projects are green, how is this company, how is this issuer moving in the right direction? So a negative example would be that a power company has a green bond, but it is going to invest more in the future in fossil fuels. So that's not a good ambition for us. And the last one is what we call integrity, where we're trying to understand as a whole, does the issuer manage those projects well? Does the issuer report information to us on a timely basis? So using those three principles, we should be able to make good enough decisions.
That sounds really good.
Yeah, definitely good principles that lead us on differentiation. So next question is, can you share examples of the successful green bond projects that your company had invested in, and what measurable impacts have they achieved?
Sure. While I cannot say specifically those names because this is not investment advice, I can share maybe anonymous examples of good green bonds that we really like. One is issued by a chemicals company. So you might think, chemicals? Is there such a thing as green chemicals or green gas? So what's really interesting is that today in the world, you need oxygen, you need hydrogen, you need nitrogen, right? Those are industrial gases for industrial processes, etc. Now, a lot of these gases are produced using fossil fuels by, you could call it distillation. So you put it through a steam process or a distillation process to break the molecules, and that's how you get these gases. But it's very polluting based on the fossil fuel nature. However, this green bond actually invests in the industrial application of electrolysis. So electrolysis is passing electricity through water, H2O, to produce H2, hydrogen, and O2, oxygen. And this electricity is powered by renewable energy. So this green bond finances that, and the company has said it wants to build its capacity of electrolysis and electrolyzers to greater scale. So from our perspective, it really helps us, to achieve those principles that I mentioned about, and achieving a low carbon model of that industrial process.
I'm sure that there are bound to be challenges with these so-called green or not green companies, because we are dealing with a spectrum of them.
Mm-hmm.
So what are some main challenges and opportunities that you've encountered?
Oh, what opportunities and challenges? Let's talk about the challenges first. So challenges, I think it is definitely challenging to obtain relevant information from these kind of companies. Usually, they are not contained in your standard financial statements or standard reporting. So it is challenging to have to go through every single one and collect relevant information. So that's a manual process, but it's quite fulfilling because we get to interact with those companies rather than, applying AI today. So I think today that's a major challenge for facing what we do. In terms of opportunity, I think when you think about it, we have the energy transition requires different estimates are there, 6 to 7 trillion per year is required to fund the energy transition. But we are so far away from that. We are only about, I think, 100 billion in every year funding energy transition. So in terms of opportunity, we have 10 times and even more in order to fund adequately the energy transition so that we can achieve the Paris Agreement to limit global warming to below 2 degrees. So that's a great opportunity from our perspective for investors to allocate to these kind of investments.
From a regulatory perspective, how do regulatory frameworks and government policies in different regions, including Singapore, influence the development and attractiveness of the green bonds?
Yeah, in the finance world or even in the business world, the common phrase is that we don't like regulation. We want less rules as possible. But actually, in sustainability, business leaders, investors like ourselves have come out to say, actually, regulations are important and we need more regulations from governments, from policymakers. The caveat or the asterisk to that statement is that these regulations need to be much more coherent. So for example, Singapore could say that issuers of bonds should disclose XYZ information. But if another government says, well, we want issuers to disclose ABC, which is different from XYZ. So from a global investor perspective, from an investor, you have two sets of information which you cannot match. And so you cannot make comparable investment decisions. So more regulations we think is good, but regulations need to be coherent, and therefore policymakers should try as much as possible to talk to each other before those regulations come out.
I understand the situation. It can be complicated, but we're thankful that work is being done in this area. So you've spoken a lot about the trends that you see right now. So what about, say, in the 5 to 10 year time period, what do you expect to see the market evolve over the next few years?
Yeah, so for the next 5-6 years, well, I hope and I do wish that the market will grow a lot more than what we have now. Like I said, we need about 6 to 7 trillion or even up to 10 trillion based on what estimates you're using per year in order to fund the energy transition. We are really far away from that, and so this is really key for us to allocate money towards these kind of investments, to grow it as much as possible for us to have a reasonable shot to achieve the Paris Agreement. So it's my own wish that investments and capacity in the market will grow much more in the next 5 to 6 years.
Okay. Before we close this podcast, any words of advice for the listeners who might be interested in sustainable finance, especially in the roles which are related to the green bonds and ESG analysis?
I can go first. I think the industry may sound complicated and intimidating for young people and youth like us, but I'm sure with an open mind and willingness to learn, you can always pick up skills along the way. Reading widely and building a strong foundation is a good place to start. And I think taking up internships, going for career fairs, attending ESG-related webinars, seminars are always helpful to gain perspective and knowledge about the space. Networking is also important, getting to know people in the industry and listening to their stories and insights, like just as we have Sheng here to share, will be very helpful as well. And I think sustainable finance is not about having financial returns, it's more about making a positive impact to society and the environment. So having passion in this space will be very helpful to drive one forward.
So I second everything that Stephanie just said, and I'll add maybe two things. So the first thing is that sustainable finance is made up of two words, sustainability and finance. And so for young students who are really interested into this field, they should be reading a lot more into sustainability, and they should also read a lot more into finance, like what are the different aspects of finance, to see where they find most interested, where they are most passionate in regarding the whole industry of finance. The second thing I add to what Stephanie said is being able to handle data. In this field, there is a lot of information, there is a lot of data, but the data is not clean, meaning that you cannot make AI go through all of that in a neat fashion. There needs to be a lot of cleaning, there needs to be a lot of context-driven analysis of the data that we get. And so students should be able to be comfortable with the idea that not everything is nicely presented in an Excel format. They have to go through, they have to understand, and then make changes in order to have good conclusions. So I think those are the two things I add to all the good points that Stephanie mentioned just now.
Okay, thank you so much, Stephanie, for your advice, and you, Jane, for your insight as well. It's been a pleasure to have you in our podcast.
Yes, I agree. Thank you, Sheng, for coming down to Singapore Poly to share your experiences and what BNP Paribas Asset Management does in this space. I'm sure that our listeners have learned a lot, and I'm humbled to have learned from you as well.
No worries. I mean, if any students were to have any questions, they can feel free to reach out and have a chat about what is this field and what is this area of sustainable finance is all about.
Alright, that's all we have for our today's episode. In next episode, we'll be touching on another topic about sustainable finance. And of course, there will be a guest to share insights as well. Stay tuned for our next episode of What's So Sus podcast. And until next time, remember to invest in a sustainable tomorrow and today. Thank you so much.